Understanding what the price patterns represent, as we can see in gold, gold had a nice big fry pan bottom, but notice the characteristic of a big fry pan bottom. It's not going to move with any great speed until it gets to the breakout area. And that's kind of what we're seeing right now in gold, which means it might not move with any great speed until it moves back up to the breakout area. However, this creates a very simple analysis that gold, unless it all of a sudden closes back below the T-line and the 50-day moving average, telling you this trajectory has now been changed, it can be pretty well assumed that this slow fry pan bottom is going to stay in progress. That allows for entering a specific sector, knowing that the uptrend will probably remain in progress, even though the general market may not be moving in that direction. That allows for trading in things like Nugget, NUGT, the gold miners bull leveraged 3 times leveraged index, that you can see that it's in a pattern, a wave 1, wave 2, wave 3. So as long as gold stays steady and strong, this trend will remain in progress, which also continues our patterns in gold stocks like AU coming out of this big fry pan bottom. And as long as it stays above the T-line, you stay long. This is the type of position that once you get into, as long as it stays above the T-line, you can stay with it, which would now be a process of producing very large profits, knowing when to take those profits. And as you can see in the Dow, there's still a nice steady uptrend, except we did have a bearish engulfing signal that pulled back today, which could imply there might be a pullback if they close below the T-line. However, at the same time the Dow was down strong, the NASDAQ was relatively flat and also using the T-line as support, which kind of gives you an impression that there's just some backing and filling in some sectors and not others, which means the overall investor sentiment of the market has not changed. That'll be it. We'll see you in the chat rooms.